everyone. Happy Wednesday to you all. It is October 30th, and today I'm going to touch on some Q4 tax topics. Try to do a Facebook Live, but I guess I don't have enough followers, so I cannot do a Facebook Live. But I am going to start doing weekly lives on YouTube, just on specific tax savings topics for my real estate brokers and agents. But to kick things off, I wanted to record a video for everyone coming into contact with me and reaching out. Just some common questions I'm getting and situations I'm seeing where people can save themselves a lot of money in taxes. So I am going to take this opportunity as well to introduce myself. My name is Cody Goldsworthy. I am a licensed and practicing CPA here in Michigan, serving clients all throughout the United States. My firm focuses on real estate professionals and real estate investors. We work with our clients in many capacities, from helping clients save thousands each year through proactive tax planning, tax preparation, bookkeeping, payroll, serving as a business growth advisor, you name it. We really try to be an all-in-one outsourced tax, accounting, and finance solution for our clients, with whatever level of service they seek. So if you're interested in working with me, please book a discovery call with me. We can get to know each other, and I can familiarize myself with your situation to see if I would be a good fit to help you. But let's get started with this first video here. Start providing some value to you all, so I'm not completely wasting your time. So tip number one: it's not too late to make an entity change. One tip I have for you is that if you're being 1099, as most real estate agents are, agents and brokers, through your commissions, if you are and you have an LLC, there's still time to backdate an entity change to help save you a ton in payroll taxes. A lot of clients come to me, they think that, their real estate dealings are just going to flow up into a Schedule C on their tax return. They're going to get hit over the head with a bunch of taxes, especially payroll taxes. But if you do have an LLC that you're receiving commission to, we can still backdate that LLC to an S corp. That's usually the best entity for my clients, but it always comes down to facts and circumstances, right? Got to get on the phone with you, see what your situation, what your goals are, and see if that's appropriate for you. One other tip with that too, if you're in real estate as an agent or a broker right now, and you don't have an LLC, you're just receiving the commission personally, go ahead and set up an LLC, start having your commissions flow through that entity. This, I like to call it like S corp insurance. It just gives you the ability to, the year of which you hit that income level where it makes sense to become an S corp, because there's more costs associated with that. But when it makes sense to make that election, we can go ahead and just backdate it, so that you can get those good tax savings right there in the first year. But again, gotta kind of hit that income threshold for it to make sense. Tip number two: if you're eyeing a new piece of equipment like a truck, if it makes sense and it is fiscally responsible, maybe we make that purchase here in Q4, ramp up the depreciation on that vehicle and drive some good tax savings. Again, only if it makes sense. I get into it a lot with my clients on this one because everyone wants a new truck, and they try to justify it by saving money in taxes. It doesn't always make sense, but definitely something worth looking into. Tip number three: now is the time to clean up your bookkeeping. Do not wait until February to clean up your books. It's just going to set you back in 2025 with your bookkeeping, and you're more likely to miss deductions the longer that you wait. When we take over bookkeeping for real estate brokerages, we drive like 30 to 40% more in deductible expenses, with top line revenue staying relatively flat. I mean, those are huge tax savings. I can't emphasize enough how valuable, timely, and accurate bookkeeping is. At the very least, work with a CPA who's in the industry that you're in. I've been personally reviewing P&Ls for real estate professionals and rental properties for years now. I can generally tell when things are missing, when they don't look right as a percentage of revenue. And I can just do a deeper dive and make sure that we're capturing those deductions. All right, tip number four: get your SEP IRA or solo 401k set up. Contribute to your retirement as both an employee and an employer. It increases your contribution limits, as well as ramps up your tax savings when you're self-employed. Pretty powerful strategy. A little bit of complexity there, but nothing we can't figure out. Tip number 5, if you invest in real estate, and I hope that you do since you're in the industry, but if you own rentals or invest in real estate, you better have a good CPA who knows the ins and outs of real estate. There's a ton of opportunity in saving real estate professionals money, by offsetting their active income through driving losses through their rental real estate investments. So really powerful. Like everything else with tax and accounting, it takes some planning, but something we do a lot for our clients, and the results are pretty awesome. And then, since we're talking rentals, it's Q4. You need to have your rental placed in service for you to get that tax benefit this year. So if your rental is not listed for rent by January 1st, 2025, it's not going to be on your 2024 tax return. So get it placed in service before year end, so that we can take advantage of the tax savings through driving losses through real estate. All right, let's talk tax loss harvesting. This is going to be tip number 6. If you sold a rental property for a gain this year, you're probably looking for ways to reduce that tax burden. Whether you're doing a 1031 exchange or you're looking to ramp up depreciation in newly purchased rentals in the same year to offset that gain. Another option available to you that I'm looking at with some of my clients, because for some reason, I kind of know why some of the clients, the markets that they're in, they've seen good appreciation. They decided to sell off rentals, right? So they're going to have a gain. And then some stocks, some crypto was crashing in Q3. So, I had a lot of clients take advantage of this strategy, but what tax loss harvesting is if you have capital assets such as, stocks, crypto that have decreased significantly in value, and you don't believe in the company or the crypto anymore, maybe we look to sell off those stocks at a loss. And what this will do is it'll help offset our capital gains from the sale of that rental that you had in the year. Tip number 7, now is the time of year that the Augusta rule is utilized a lot. People talk about this a lot on the internet. But with the holiday season coming, now is the time where people are having their employee appreciation days, their corporate retreats, whatever you want to call it. Have your team over to your personal home or your vacation home, rent out your residence to your business, keep it under 14 days out of the year. And basically what you're doing here is that you're getting the tax deduction out of your business for renting your home. And then you're also getting the business loss in your business for paying rent to yourself. So it's a cool little strategy you can take advantage of. And it's, a lot of people seem to take advantage of it in Q4. All right, that is it for my tips, but I do have 2 questions I wanted to answer that I've been getting a lot from a lot of my clients. Number 1, I alluded to it earlier, but if you buy a rental property and it's not placed into service before the end of the year, so December 31st, there's no tax benefit for it for 2024. You receive the tax benefit in the year which is placed in service, not just when it's purchased. I don't care if you purchased a rental in 2022. If it's not placed in service in 2024, it's not going to be on your 2024 tax return. And then question number 2, this is more for high earning W-2 individuals with the spouse trying to qualify as a real estate professional. If you're a real estate agent or a broker, you're a real estate professional, no question about it. But if you don't have active income or you're a stay-at-home spouse, but you're taking care of the rental portfolio, it's going to be very important to keep a time log for real estate professional status. And I guess the question I get a lot here, the misconception I see quite a bit, is real estate professional status is not a you qualify for it and you have it for the rest of your life or for the next 2 years or whatever. It's an annual test. So you need to you need to keep a time log for every year of which you want to qualify for real estate professional status. So it's an annual requirement. Keep your time log. Don't just assume it's going to roll over from the previous year. All right, that's it. I don't know how long this was, but hopefully you got some good value out of this. We're in Q4 now, so now is the right time to find a good tax advisor. There's still some strategies we can take advantage of to help save you money in taxes on this upcoming tax season. Our client roster is filling up. If you need help, you're looking for someone, please be sure to book a call with me. We can talk and see if it makes sense for you to join my firm as a client. If you wait until, I see this all the time, I'll get so many calls in December and January. If you wait until early 2025 to find a good tax professional, it's going to be too late. It's going to be very difficult to find anybody. As the owner of an accounting firm, we are currently staffing our firm for our client roster that we have. Maybe a little spread in there for some new clients we might bring on, but you start getting into late January, there's just not enough bandwidth on our teams to accept new clients. So don't put yourself in that situation. Find somebody now so that they can proactively save you money in taxes, but then also know that you already have someone that's ready to prepare and file your tax returns with the IRS in the state. So that's it. That's it for me. Have a great rest of your week. And if you need anything, please be sure to reach out anytime. Thanks. Bye.